What's up, everyone? It's David here. And on today's episode, we have a special guest, somebody who's doing some big things in AI technology and it just came out with a new book. And he's sharing his strategies for building a very successful team and business, which in a lot of ways are correlated. You guys know that. I talk about culture all the time. And today we have Dustin Hillis, and he's going to be sharing with you some incredible things that he's doing in the space of healthcare and schools. It's just crazy, man. And we got into a lot of things about finance, business, how to scale. And I think you're going to find this a really interesting episode. And if you want to get access to this at the end, we'll be talking about how you can get access to his new upcoming book. So let's dive right in. What's up, Dustin Hillis? How are you, man?
Great. Thanks for coming to visit me here in Nashville, Tennessee.
Hey, man, I'm excited to be here because, we connected a few weeks ago and you told me about your new book. And I said, man, I got to come check this out. So tell everybody what your story, where are you from, what you've done, just so we get context of what we're here to talk about.
25 years ago, I actually started selling door to door. It was straight commission, working 85 hours a week, and started at the bottom and worked my way to the top of that company.
Selling what?
It was educational reference guides and software. And then we had an online educational subscription website that was like a tutor online.
So is this B2B sales, door to door?
B2C. So we were literally knocking on doors. So my first year I sold books and software door to door in Missouri. My second year was East Texas. My third year was West Texas. My fourth year was in Alaska.
This is interesting to me, but what's the price point of this stuff?
Back then, about $1,200 would get you the whole bag. So that would be like, I don't know, 20 books and probably 20 CDs.
So parents who love their kids.
Yep.
That was the spiel, right?
The whole sales process was, do you care about your kids' education? Here's how you can invest in your kids' education at home.
So funny, I don't want to divert from the story, but what I've learned about sales in general is that when you talk about somebody, like if you want to change somebody's life, you could talk to them till forever and they'll have to think about it. You talk about their kids.
Yep.
And they will finance, they'll
right.
borrow, they'll steal, whatever they have to do. So
I have stories of people that they didn't have the money when I knocked on their door. They would save up all summer. I came back to deliver the books at the end of the summer, and they had a jar that they had put money in to save for the books.
Wow.
How cool is that?
So
the average package that I sold was probably $300 though.
I mean, it's still, so you were door to door knocking. You became the number one guy in the company doing this?
I did. Yeah. I broke the all-time company sales record. It was a 155-year-old record at the time. That record stood for about 17 years. It was about 250,000 salespeople that had gone through that sales program.
Wow.
So it was a pretty good record.
So you built that's where you cut your teeth. You learned how to sell.
Yeah, that's 25 years ago.
Oh, wow.
And from there, people started asking me to coach them.
On the sales process or on that particular?
Yeah, I actually started writing it down because I created a referral process that was unique. I created identifying buying behavior profiles that was unique. So I would at the door identify if they were a driver, like a disc, a disc. Who's the driver? Who's the...
You created that?
So the book was called Navigate, Selling the Way People Like to Buy. So I changed it a little bit. It was a fighter, an entertainer, a detective, and a counselor. And they all have different buying styles. And then everybody has different selling styles. So it was adapting your selling style to their buying style.
Yeah, that's kind of discish.
Very discish. I actually created a custom disc test that customized all the content to buying styles. So that was pretty cool. That was my first book I ever wrote.
How old were you?
I was 25, my first book.
That's an interesting thought because mean, at 25, I was drinking a lot more than I needed to. And you were writing a book on buyer profile.
I was just a little, I started doing that when I was about 16. And so, I was pretty early to the game on that stuff and got it out of the system by about 22 is when I kind of...
Well, I think we started at the same time. I just didn't get it out of my system. Trust me, bro. I was probably younger than 16. It didn't leave till I was like 30. But anyways.
Well, it helped. I think I had a spiritual experience with God that kind of got me focused on getting cleaned up a little bit. But I went down the hard path for a while, and then from there. People started asking me to coach them. So that was kind of a fun journey. My first coaching client actually broke the record at that company. So I flew to my first keynote which was actually in Scotland. So as a 22-year-old, I'm flying to Scotland thinking I'm hot stuff, having a paid for trip internationally to do a keynote. And at the end of it, this gentleman named Theo walked up to me and said, "Hey, I want to break that record you just broke. Will you coach me how to do it?" And I thought, yeah, that sounds really cool, you know? And that was the first PowerPoint I'd created for the keynote. So I just created my first keynote. Now I'm going to create my first coaching program. So I started writing down all the things I did different, and it was referrals, adapting to buying behavior profiles, closing, like having multiple closing techniques, having if-then scenarios. So if they say this, then you close this way, answers to objections. So I created all these modules, put him through it, and sure enough, he broke the record. And I thought,
He broke your record?
well, so this is crazy. So he's from Singapore, and much later he shared with me that he totally was on track to break the record. He was like 500 units short of breaking my record.
Oh, wow.
And out of some weird like Asian respect thing, he decided not to break my record. And I was like, "Bro, I wanted you to break the record." And so out of respect, he didn't do it.
So this company was international is what I'm
Oh yeah, it's an international. So when I became CEO of that company 16 years later, I was in charge of 30 companies worldwide, had about 2,000 salespeople, and all 30 companies reported to me after,
Yeah, you have
20
a
years
formal
later.
education? Did you go to college?
Yeah, I went to University of Tennessee.
Okay.
And played football actually for a year in Missouri, Southwest Baptist University in Bolivar, Missouri, booming metropolis there, and got hurt. Thought my life was over. Then transferred to University of Tennessee. I had some buddies playing football there, and that's when I started selling books door to door. Was attending University of Tennessee
And selling books.
and
Like-
started selling books during the summertime once I stopped playing football.
Well, it's interesting. Well, it's because you seem very, well versed in education. I mean, obviously, formally it's good, but it seems like you were street smart.
It was the School of Hard Knocks that
Yeah.
really taught me the most. And then starting my own business. So after falling in love with coaching, I started my own international coaching business, put a business plan together. But then that company that I was selling books door to door for found out about a book I was writing, coaching curriculum. And they said, "Hey, we want to do that. Could we fund it?" And I said, "Sure." And they introduced me to another person that was like a co-founder they wanted me to start it with. And so together we launched, it actually started off as a seminar business. So we were road warriors. Our first seminar was in San Francisco, selling $300 tickets at a time. I recruited a team of 25 people in the first 6 months. And literally we were cold calling out of the phone book. So this is back when the phone book actually existed.
Wow.
And we would tear the phone book pages out and hand it to people, and that was their list. Like it was hardcore selling.
Wow.
And we were like carpet bombing
Yeah.
San Francisco. And we hired a consultant. Back then it was like Brian Tracy and all those guys putting on these big motivational seminars. And he said, "Man, if you guys are selling tickets at $300 a pop, if you get to the point 5 years from now where you sell 200 tickets to an event, you're big time." Our very first event, we sold 750 tickets
At $300?
at $300.
That's a big number.
It was. And funny thing is, 2 weeks before the event, one of my partners looked at me and said, "Hey, we got like 700 people come to this event. What are we going to talk about?"
Oh, yeah. Hey, if you
So,
sell it, then I'll figure that out afterwards.
That's right. So we created the PowerPoint for the event 2 weeks before the event. And so, and then the second event, we sold 1,000 tickets. So that was 6 months. No, that was actually 4 months. 4 months later, we sold 1,000 tickets to the event. And so the first one was San Jose, second one was San Francisco. And then we did over $1 million in revenue our very first year in business.
Wow.
And we were all 25 years old.
I want to pick something out of that, because what I picked up from that is your opportunity was given to you because of a past track record of success.
Yeah.
Because that company came to you and said, "Hey, you've got something.
You've proven yourself."
Yeah, you've got
Yeah.
something, and we've seen the results, so that you wouldn't have gotten that opportunity.
No, they wanted to invest in the person. Like,
That-
you bet on the jockey, not the horse.
That's exactly it. And so if anybody's watching, I want you to pick that up, because that is people will miss that. They'll be like, "Oh yeah, it's easy. He had an investor that just put money up and then he could go." I'm like, well, they had to believe you could do it.
Yeah.
And
Yeah.
so,
And then you have to do it.
yeah, well, that's true. But if there's a belief in you, there's a high likelihood you will do it, right?
Yeah.
It's greater than 50%.
Yeah. Yeah. So I did that for 16 years. We actually transitioned the seminar business to a coaching business. We'd put on these huge events. Afterwards, people would walk up and they'd say,
What's next?
"This is life-changing. What's next?" And at the time we would say, "Buy a ticket to the next event." And they would. And then it was like, "Oh man, we need to do better than this." So at first we hired other coaches to come to the event and we'd put them on stage and sell their coaching. And we had a really cool experience. This guy, Matthew Ferry, out of California, was coming to our events and he set us down. His dad's Mike Ferry, the big real estate.
I knew the name, the last name, but okay.
Yeah. So his son was like a life coach and awesome, awesome guy. And he goes, "Look, I'm making money from this and I'm going to lose money by telling you this, but your event is like coming to a rodeo. My coaching is like ballet lessons. Would you find it weird to go to a rodeo and buy ballet lessons?" I was like, "That'd be weird." He goes, "You need bull riding lessons for your rodeo." So he locked us in a room in Los Angeles in his office. And in one day, we created the outline of the coaching program.
Yeah, he forced you to get clear on what the outcome
Did not
was.
charge us any money.
Really?
Did it out of the kindness of his heart. So Matthew Ferry is a just awesome guy. And I will forever remember that as like, it impacted me to want to pay that forward of just being like, he didn't have to do that. And
That's
it was
incredible.
really cool.
So you mapped out a coaching program that would become the offer after the
Yep.
event or at the event.
At the event. And then I broke off the seminar business and opened up a separate division that just did coaching. Spent 2 years refining the coaching modules, refining how to sell coaching outside the event, recruited a coaching team, which ended up becoming the fastest growing piece of the entire portfolio of the 30 companies.
That's interesting.
Excuse me.
Is it?
So that ended up growing at 68% per year for 8 years in a row. We did over 100 million in revenue in 10 years. And we ended up in 10 countries, 150 coaches, 20,000 one-on-one coaching clients. And that's what catapulted me into them asking me to become CEO of the entire family of companies, was the success of the coaching business.
And that's interesting. So what made him? So it's interesting to me to hear that you went to CEO, because why do you think they picked you? Just top performer, or were there
No.
other things that you were doing besides just,
Yeah, I think it's actually what ended up becoming the pillars of this book. Was I really figured out that the thing that drove me to not only be like the number one salesperson, but then also build a team of over 150 of top talented full-time coaches and open up 10 different countries and create all these coaching modules and recruit.
What was your role then? Title?
I was the president of that company. And so, I stopped selling after about 3 or 4 years where I wasn't the top actually, I never, once I started the coaching business, I never really was the number one producer. I could have been, I guess, but I was recruiting people that were better than me. So I think that was my biggest strength that I found pretty quick, was I loved recruiting people better than me, empowering those people, building those people, and helping them to build an even bigger, better company, which is the subtitle of my book, Building a Business Bigger Than You. There's no way you can do it by yourself.
That's
I figured that out about my 5th year into my career and spent 4 years personally slaying the dragon. I personally wanted to ring the bell, break the record. And after that, I found it to be just a certain level of satisfaction, but I got way more satisfaction out of coaching other people, recruiting other people, building other people, and truly building the business. And then that business was cranking out. I mean, we were doing 20 million in revenue, 4 or 5 million in profit. And that was fastly becoming the most profitable, fastest growing company out of the 30 companies. So I think that trajectory and seeing the growth, I was leading the operations team. We had a well-oiled operations team with finance and legal and HR and all of that. And so I think everybody, the board, I was on the board of directors for several years, and they would ask what I'm doing. And I would just tell them, I'm focused on creating these systems with business development, marketing strategy, finance strategy. We were creating very creative compensation plans, that was getting people on straight commission, but then fueling them with coaching clients. So we had very low overhead, and it was very profitable. And I think that the board said, "Man, you need to do that with all of our companies."
But I mean, 30 companies, that's pretty interesting. So were they synergistic in nature?
It's pretty random actually. We had an investment company called Southwestern Investment Group. They have a different name now, but they at the time were doing 5.5 billion of assets under management. They were a Raymond James company.
Okay.
And then we had you name it, an executive search firm, one of the top executive search firms in Middle Tennessee. We had let's see here. Well, obviously the door-to-door book selling business. That's the oldest direct sales company in the country. The consulting we had 3 consulting businesses.
Is this
We had a big
VC or
insurance.
what?
We had 3 insurance companies.
Are they VCs? Was this VC or?
It's more like angel. So what they would do is finance these people. So the commonality was the people that sold books door to door and did really well. They would and they had an idea for a business. They'd put a business plan together, and then the parent company would fund that business.
And that's how they would become partners.
And they become partners. So we had a real estate business start that way. We had a travel business start that way. We had multiple insurance companies start that way.
It's because when I think about it, I think that the biggest superpower of an entrepreneur or even a CEO can have is have focus. And that seems like you wouldn't be able to get focused there. Like one day, it obviously operationally, it may be very similar. I mean, company's a company, a business is a business, but the product mix has got to be crazy. Like
it was crazy. The 4 years I was CEO were very challenging.
I mean, you got to be getting barraged with random shit every day.
Yeah.
Like
the difference between being president and CEO is different, and the difference between being an entrepreneur. So there's an evolution. The entrepreneur takes a certain type of skill set. Then becoming a president, where you have leaders that you're leading, is a different skill set. Then becoming a CEO of a global conglomerate is a different skill set. So for me, learning those different skill sets, fine-tuning those different skill sets, and mastering those different skill sets, that's what I found fun. That was like the most enjoyable part for me, was the growth. But man, it's a different level. It's kind of like going from being one of the best college football players to going to the NFL.
Yep.
And then figuring out how to win the Super Bowl.
Yep.
That's got to be how it feels when you're jumping from leading one company to leading a portfolio of companies.
And then becoming the head coach that's going to take them to the Super Bowl. Like
right.
shit. Like, I mean, from player to coach is a big deal.
And then from coach to GM to GM to owner.
Yeah, like people hate on Jerry Jones, but that's a different level of thinking. It's totally different from people who are, because I mean, I'm from Texas and I'm kind of a Cowboys fan. I really don't give a shit if they win or lose. But when people hate on somebody like him, I'm like, he's not thinking about the game.
Yeah.
It's a business.
Yeah.
He's got I mean, obviously he wants to win.
Yeah.
But it's chess.
Well, and that's what I'm thankful for. That all led to what I'm doing now, which is I'm the president of SafeSpaceGlobal.ai. So running a publicly traded company, that's a whole nother ball of wax. So this was a private company, and now running a publicly traded AI technology company has a whole nother set of skills and challenges that you have to master. Raising money, we raised $10 million in the first 6 months when I joined the company.
How long ago was that?
That was a year ago.
Okay.
So a year ago, I started with Safe Space Global. At the time, it was actually called Healthcare Integrated Technologies.
What a great name.
Yeah. Yeah. And it was mainly healthcare. So we were in senior living. The ticker was HITC. But then we wanted to get into schools, transportation, prison systems.
Safe.
So we changed the name to SafeSpaceGlobal.ai, and the stock ticker now is SSGC, and it's publicly traded. When I started, the stock was trading at about 7 cents, and now it's up to over 40 cents. So it's been fun seeing that journey, and it goes up and down as we're over-the-counter pink sheet, fully audited company. So our goal is to get to the uplist, which is a $2 per share price point. And once it does that, then we're on the Amex, the New York Stock Exchange Amex. Then it's the big dogs can put in the money. And the CEO, Scott Boroff, he was on Wall Street for 30 years, and all of his relationships are with the big money. So they're all, as soon as our friends and family have us uplisted to $2 per share, then the big ones come in, and then our goal is to go to the big board, which is the New York Stock Exchange, ring the bell, and that'd be about a $10 price point per share, which would have a market value of over $1 billion.
When do you expect that to happen?
Well, what we have publicly put out in our press releases,
I like your style. I get you.
A minimum of 5 years is our goal, and we're obviously Scott wants to beat that. But right now, we have sectors with schools. So as you can imagine, just turn on the news right now, and we have a technology that actually will proactively stop a school shooting. So we use, we are a camera. No, we're camera agnostic. We're a multimodal AI company that plugs into their existing camera system. So we're the backbone, we're the brain that makes us dumb camera smart.
Operating system behind the scenes.
Yeah. So it's facial recognition, object detection, notification. That's what we do better than anybody else.
It's interesting.
And so right now there is gun detection companies out there, but they don't want to go through. There's a lot of hoops to jump through with FERPA and all the regulations for, you have to be SOC 2 Type 2 certified. You have to be ISO 27001 certified. We're international. So we have an office in Singapore. We have an office in India. We have team members selling in the UK right now. So you have to be ISO 27001 certified for your international clients. And then in America, you need to be SOC 2 Type 2 certified to meet all the requirements. So Coach Burr is on our board of directors.
Yeah.
So I met Scott at an event on how to raise money. We were in Florida, just randomly ran into each other in the hallway. And I think it was God connecting us. And I was wanting to raise $10 million specifically. That was my number to go learn how to raise. And
I'm here just because I want to learn how to raise $10 million. I like your style.
I literally said that. And
he's like, coincidentally, I need $10 million.
And he said, I happen to have a privately or a publicly traded company because I was going to create my own venture capital fund was what my goal was. And so he said, how about I help you skip about 5 steps and start in the big leagues? And I thought, I like skipping 5 steps. And so
that's an interesting story. But for anybody's watching though, pick up what he did because there's a nuance. And by the way, from entrepreneur and CEO, business owner, like there's a whole nuance. And when I asked him about, when are you guys going to go to the big leagues? And he had to say, well, what we publicly have put out, just so we're all clear, when you're a publicly traded company, you actually can't say shit.
That's right.
You have to bite your tongue. Somebody could say right now to him, they're going to bring $1 billion of capital to this to take it internationally. And he couldn't even talk about it.
That's right.
He'd have to just shut the hell. He could go home. He might even be able to tell your wife. You might have to be.
Yep.
Because if she talks about it.
That's right. It's a different set of rules and we take it very serious.
You have to.
We don't mess around. And it kind of kills you because when we raised the $10 million, the reason they call it friends and family, it's literally your friends and family.
It has to be. It has to be prior relationships.
Yeah. And so they're again, what they're betting on is the jockey, not the horse. So they're betting on me. They're betting on Scott. They're betting on our team. We have 80 team members now. And so our team is first class. So if anybody wanted to see our team, you could go to the website, www.safespaceglobal.ai. Go to the About Us section and check out all of the team members. Just read their bios. They're world class, every one of them.
So I'm assuming you guys are already in schools?
Yes. So we had a press release that went out.
I just want to know.
Yeah. So this is in the safe zone. So we do have our technology being implemented, and we already were in healthcare. So we had a client for several years where we were proving the concept. We were testing all the AI models. So we had 24 locations that we were in for 2 years. So right now is the growth stage where we're
proof of concept's done. Everything's good.
Everything is green lighted and going. And so beyond that, I can't really talk about what is cooking. But I can say that we're We have 80 team members working every single day around the clock.
So I'm assuming
And
though you're
they're
not
some of the
profitable.
best salespeople that you've ever seen. We have $6 million cash in the bank. And that's on our books as part of the uplist. We have 3 years of runway currently with our burn rate, and everything else you'll have to get in future news articles.
No. But by the way,
Yeah.
what I just asked for anybody who picks this up, and so I'm in the tax and finance space primarily, and when you hear these things, just so you know, I'm an investor every day. I mean, that's my hat. Like I got to look at things as an investment. What you're telling me and what you're sharing with me are very important for any investor. So if you guys are out there watching this and you're thinking, maybe I want to look at this, him just disclosing all that really quickly and knowing it, it's very impressive because very few people know their numbers, understand their burn rate, understand cash flow, liquidity, team.
Thank
Man,
you. Well, that's my job.
yeah, I really appreciate I'm just really appreciating it because it's very rare that you meet somebody who's got that instinct and knows these things.
Oh,
So
well, thank you. That means a lot to me.
yeah, you're definitely doing good. So let's kind of transition. So you're with this company. You guys are going to the moon, and I think based on what I know about the market and the demand from the market currently, especially children space, elderly space, both are the two sides of the spectrum that we have to focus on.
The most vulnerable people is who we're protecting first.
Correct, and anybody will pay any amount of money to solve those problems. So this is it's a very interesting space. So how does this all correlate to your new book, Capacity?
Yeah. Well, it's fun because I have spent 20 years fine tuning the skills that went into the book. And now over the last several years, reapplying them to new businesses has been fun, where when you think of what I do every single day, and it's like, how in the world did you recruit 80 team members and scale to the level you have in 1 year? The answer is what's in the book.
Frameworks.
So there's 5 pillars that I'm thinking about and doing every day. They're executive strategy, business development strategy, marketing strategy, finance strategy, legal strategy, and then the bonus pillar is optimizing your life strategy.
So let's consider it a wheel, right?
Sure,
okay. Yeah. And in those percentages, are you equally driving those daily, or is it a constant, never-ending?
That's a great question. Nobody's asked that yet. So with the percentages, it's based on the timing of the business. So every business goes through the classic. I don't know if this was Zig Ziglar or Carnegie or whatever, but this is a fundamental framework. Businesses go through the stages of team development.
Yep.
So you have the storming, norming, performing stages. So when you're in the storming phase, you need to be locked in to your executive strategy, your business development, your marketing, and you are just getting out of the trenches.
What? Customer acquisition.
Customer acquisition. Nothing's more important than starting and getting that revenue going.
Yep.
Becoming profitable somehow, some way. And that's
fighting.
where you're like an entrepreneur. Like, even if I don't care what your title is, you could be the CEO.
Or how much money you have.
Or how much money you have. You are in the trenches. You are going to battle every single day.
Amen.
From there, once you have life, I'd say once you hit about $1 million in revenue, you start looking up and you're like, hey, things are working. Like,
maybe
there's a little bit of breath here.
Maybe we should go to the hospital.
Yeah. We might want to, so then I would revisit executive strategy at that point. So the strategy evolves. So you can have a 5-year business plan, and often that first year is much different than your third year. So if you know how to put together a proper business strategy and a business plan, then you know how to check in with it and pivot to where it's like, hey, what if we leverage this $1 million we got now? What if we acquired one of these vendors or one of these competitors? We bolted on this product mix that immediately would add another 30% of revenue.
And enterprise value.
Then you could go to like legal strategy and you could say, hey, our contracts, we really need to start looking at this IP we've developed, because in the last year, I think we're doing some unique things that nobody else is doing. Maybe we should get some trademarks. I mean, if you really want to go crazy, try to get a patent. We have 2 patents and we have a great patent attorney, but man, getting an AI patent is like the Wild West right now. We successfully did it, but that's on the legal strategy side.
In the marketplace today, this is something I think about all the time. Is a 5-year plan even something somebody can even follow anymore? Like, because
Great question.
the nature of business today, it hasn't changed. Fundamentally, your strategies are exactly on point, but the speed is changing.
That's right. It is. I do think that there is power in a vision.
I agree with that.
And so when you create a 5-year vision, number one, it should inspire you as the entrepreneur, as
Amen.
the leader, as the person that has to wake up every day and like make things happen.
Amen.
And so for me, a 1-year target, it's almost like in my mind, it's already happened. So I get less motivated when I know I have all the things in motion to hit a 1-year target.
I agree with that.
But when I got a 5-year target to hit, which right now is $1 billion target.
Is it $1 billion rev or $1 billion valuation?
Valuation.
Okay.
100 million rev, $1 billion valuation.
You know, so just curious though on that. You think it's only gonna be 10? The multiple is only gonna
Oh,
be
no. I'm being very conservative.
I'm like,
Yeah.
dude, bullshit.
Yeah. It's better to be
Conservative. I agree with you,
Yeah.
but I mean, you're probably 20. I mean, it's
from your mouth to God's ears.
yeah. I mean,
The multiples on it, you're right. Our industry does not have a 10x. There's multiples that are very
aggressive,
but
it's aggressively priced because it serves the market. The market, like,
that's right.
Especially if you're uniquely positioned. Now, I don't know who the suitor is. Do you know who the suitor is
For what?
For the acquisition? Because it's going to go.
We've had some phone calls. Our CEO's already turned down some stuff.
But who's the ideal candidate for that? Like, because I'm trying to identify who that is. That's interesting.
I mean, it'd probably be easy for you to think of AI tech who would buy because we're on the software side, so we are pure SaaS. So they would buy our programming, our software,
take it to other verticals,
and they'd plug it in. They'd roll it in.
They'd put it in restaurants, or they'd put it in other whatever they.
Yeah, we're so niched right now that we're intentionally staying away.
No,
from
you should.
The easy stuff. What we're doing is the hardest. Like, we're regulated. Senior living is the second most regulated industry behind nuclear power.
So then,
and then schools. I mean, think of the red tape you have to jump through to get.
So if you could make it there, and you can make it anywhere.
And the big dogs, they're going after the easy stuff. The malls and that kind of stuff, retail. So we wanted to niche. We wanted the product to just be the best. We want the tech to be like saving lives, and then from there, somebody's going to catch.
Yeah, then it's like buying behaviors or something else. They can use the algorithmic things to.
It can be adapted. We want to keep the integrity of our piece of whatever they have us do be in the mission. Our team is 100% bought into. We save lives.
Heck yeah.
With the most powerful tool that's ever been created.
Amen to that. Like, no, truthfully, like, you've got to, and I believe in what you said, the 5 years for the vision, the mission of the company. And I'm talking about it money, because that's obviously what drives the business, but mission is critical. Like, you have to have a mission and vision beyond that. And I think if your mission is to save lives, I mean, I can't meet a person on the street that wouldn't agree. Like, I got to join that mission.
That's right. Our tech team, we recruited some of the top talent away from Google, away from Oracle, away from like the big dogs, and they're taking massive pay decreases to work for a company that has a mission in AI to save lives.
That's incredible. I'm sure they got equity too. But.
Yeah. Everybody's very happy right now, and they know where we're going.
Hey, man, I mean, that's the nature, by the way, for anybody who's listening, the nature of the one thing that I believe that holds people back is not willing to take a step back to be able to take a huge step up. Because that what you just mentioned, a guy who comes from Google making $250,000 or $500,000
or $1 million.
Yeah. Or well, it's like the guy who, Mark Zuckerberg offered $1 billion to, and he's
right. He said no.
No.
And there's a lady that's running that, a huge company that they're trying to pilfer right now.
Yeah.
And nobody's leaving her company because the mission.
Well, the mission is great, but also the opportunity. It's like, I can take a step back here and I can go to the moon for the impact, right?
Yep.
So that's what it's an interesting world that we live in where people don't see that. And I know a lot of people who are only on the up. So they're like, I got to go from company to make a little bit more money, a little bit more money, a little bit more money. And they're not mission driven.
and it's not fulfilling.
It's not. And then in the end, yeah, they have some money, but they're just dead.
Yeah.
They've been beat up, literally, physically, and
Well,
mentally.
and in order to really build something, you have to have the stick to itiveness, if that is even a word.
Yeah, no, that's a great word. It's a great word. We're in
But
Tennessee. They make up shit here all the time.
and that's why I live here, so I can be amongst friends. And so, you know, the painful stuff, the hard stuff, what we've been going through for the past year, that's the stuff most people can't stomach. Like the amount of problems we deal with daily would boggle your mind. And we just have a team that are relentless. They get excited about the problems, and you just don't quit.
How can we do it?
And if you don't quit, you'll find yourself in a position way bigger, way better than you ever could think of. But the people that take the easy path, they follow the money, they're easily recruited away from something. Those are the ones that end up looking back and there's no equity, there's they didn't build a business and they made a buck, a quick buck. But even the friendships, like when you work with somebody, it's like going to war, right? Like the reason that soldiers stay friends forever is they went to war together.
It's a brotherhood.
Yeah. And business can be the same way. When you go through hard stuff as a business partner with somebody and y'all stick through it and y'all don't kill each other.
Yeah.
Then there's a bond there.
You know, it's interesting you bring that up because I feel like that about our company. But what I feel is one of the biggest challenges and one of the best things about business, if you do it correctly, like you guys are doing, is you're putting people in the right places. And the reason that people hate each other in business is because too many people are doing the same thing.
Yeah.
And you've been given the role and the responsibility of leading the charge. And there's another guy out there who's doing this and another guy's doing. And
so I'd call that executive strategy.
There you go.
If you don't have the executive strategy, you don't have the right people in the right spaces doing the right things.
And if you don't, it's chaotic.
That's
again.
right.
And it's contention.
It is.
That's what I see all the time.
Yeah. And it's funny. A lot of people try to bootstrap something to the point of they never get started. So a new lesson I learned is how to raise money and put a pitch deck together and properly, we raised $10 million in 6 months, and I never raised capital in my life. So that was like a whole journey to get the capital and to fund the plan that we had that we're executing now.
Friends and family though, right?
Friends and family,
Okay.
$10 million in exchange for shares, and that was it. And so from there, then the strategy becomes putting together a budget. And really, most people, I don't think, understand what a budget's all about. So they think it's like how much money you're making, how much you're spending, and they do like a cash basis budget. And I'm like, and I've seen this in my coaching days where dozens of leaders, when I'm like, hey, walk me through your finances, and basically they turn on their computer, they pull up a spreadsheet, and they're looking at their bank account.
Yeah.
And it's like how much money came in and how much is going out. And that is not a financial strategy.
That's history, baby.
That's right. That's right. So you start looking at forecast, having a 13-week rolling cash forecasting tool, having an actual P&L, getting GAAP accounting. Most people haven't even heard of GAAP accounting.
No.
So, and it's okay. You don't have to be, as the entrepreneur, you don't need to go get your CPA. It's easy to hire a CPA. I'm sure you know a dozen CPAs.
Yeah, it's all we do.
Yeah. And so hiring somebody that's a professional is the starting point of your financial strategy.
Yeah.
And then from there, you partner with them. You can set the vision for the strategist where you're like, hey, I'd like to have my books in order. I want to have $5 million cash in the bank 3 years from now. Here's my product. Here's my margin. Here's my business plan, but now I need you to help me take my business plan and put it into a financial strategy. Also, banking relationships, all of that goes into a proper financial strategy.
This is important to kind of pick up because when you say GAAP, a lot of people don't know what that is, and it's generally accepted accounting principles. And what's very important is that, so I'm in the tax side, right? when you do GAAP and you follow GAAP, it does not align with your tax. Like it's a totally different thing. And so people, when they look at their books, they're like, this is what I'm going to report because this is my profit and loss statement. But if you're doing traditional accounting, or we'll call it business owner accounting, that's how it would look. But GAAP is totally different. The way depreciation looks on a real set of books is totally different from a tax book.
Yep.
And I learned that many years ago, but I still see a lot of business owners who are scaling like you guys who haven't adopted these principles. And then, they go to financing, or they're trying to acquire investors, and these are serious investors, and it's a mess.
Yeah. If you send them a spreadsheet, they're not going to put $10 million into your business.
Correct. So just because this would be kind of selfish of me, but I'm in the process of thinking of doing a friends and family round.
Yeah.
What advice could you give me from from an equity give to a what do I disclose? Obviously as much as I can, but like what are they asking in the friends and family? Are they really even asking anything? Because I mean, they're betting on you.
Yeah. So we had a little bit of a pivot when we first started. We were being too general. I think when we first started raising capital, our first 10 meetings we had, it was just raising the money, growing the business, and then we were going to acquire businesses. And
that was the growth strategy.
And that was the growth strategy. And I sat down with Scott and said, look, we need to be all in on specifically saving lives with AI. And he was all about it and said, yeah, how do we position that? And I said, look, this money, we need to give them exactly where we're going to put the money. So we went ahead and built out the structure, saying we need X amount. We put over $1 million into the product development for the AI. We also invested in the team. So I was like, if we're going to be global, I already have the team in Singapore. I have my buddy that I've already worked with, who's working with Google, and we can transition. He'll run Singapore. Our tech team opened up an office in India. So, and then recruiting our sales team and operations team, finance team, the whole thing.
So you said we got to build a business.
So we're going to build a true business. So once we put that into the PowerPoint and we started explaining, this isn't just money where we're going to figure out what to do with it after you give us the money. It was a plan. People started investing in the plan. Now on the acquisition side, we're still looking to do acquisitions once we uplist. And that's going to be specifically buying companies that bolt into our existing business.
But they give you the shortcut to something that you need.
They've already built like gosh, I can't give you the examples.
No, I know what you're saying.
But think of what would help a school AI company and that kind of tech that's out there. Because there are very specific, very niche apps that are out there.
Yeah.
That we aren't going to develop, but we could buy and then bolt it into our backbone. And then overnight, these schools have this capability and we just roll it into our
strategic.
Company. Yeah.
It's strategic.
And it's actually accretive. So what's cool as a publicly traded company is you can buy these companies.
And they uplift real quick.
And it goes up. So the price that you pay is a market price.
But you make them very valuable.
And that's what NVIDIA did. So if you look at NVIDIA's growth strategy, they actually did this acquisition through accretive acquisitions through equity. And every time they bought a company, the stock went up. And overnight, the value of the company they bought went up more than their market value.
And everybody is happy.
Everybody's happy. And we're going to do exactly what NVIDIA did.
So what you're saying to me, though, is, and this is because I actually thought the same thing, because I think that raising money to raise money is dumb, right? You actually have to have every dollar kind of spent.
Savvy investors want to know.
Yeah,
they're not just going to give you money and say, I trust you.
It has to be, well, I mean, if
some people might.
If you're Elon Musk or something and he needed it, right? They're like, whatever you want to do, Elon, we trust you. But we're not there.
Yeah,
right?
when his autobiography is incredible.
I've read it, yes.
So the SpaceX story of having 1 month left of cash burn and then that NASA contract coming in for 80-something million. I mean, that's what it feels like when you're an entrepreneur. And Elon Musk has walked that road.
Yeah.
Now he's proven himself and people are throwing money.
Yeah, they're just like, what do you need?
They're valuing Tesla way more than it's worth.
So we're not there yet, though. So we have to account for every penny.
That's right.
And I thought about that. So I'm looking at a friends and family round for our SaaS. And the reason I want to do it is because I have some strategic moves that I need to make. And I'm like, I can either go to the bank and borrow it, or I could strategically raise.
Yep.
What did you, I mean, I don't know if you could disclose this. What's the percentage of equity given up in the friends and family?
Well, as a publicly traded company, what's amazing is
It was real stock.
it was stock, publicly traded stock.
So it was already, when you did friends and family, it was already publicly.
Yeah. So Scott had the vision. So he spent 30 years on Wall Street. So this is where I went to this event to learn the ins and outs of raising money. I was going to start off probably as a VC. Then after I grew it, I could become a hedge fund, and then maybe one day be publicly traded.
Hey man,
and literally I went from that to straight to publicly traded with Scott. So he already had done a reverse triangle merger, which I'd never even heard of until I met him. So he had acquired an existing company, gutted it, rolled an AI company into it, renamed it. And
so they already had spent the money to go into the market.
It's hard to get. Yeah, it's about a $500,000 investment to become a publicly traded company. So what you can do is you can buy one, and through a whole series of events that Scott is the expert at explaining.
Well, yeah, basically you're buying what they built and you can just change it, right?
That's right. Right.
But I mean, did they have investors in that original company?
You have to buy them out. Like there's a process to it, and Scott's the expert, so I don't really.
That's interesting.
Yeah, that predated me. So that was part of why I wanted to partner with Scott. Was not only I love Scott, I think he's amazing. I think I find it very easy and fun to work with him. He's giving me full access. Like I'm running the company. He runs the finance side, and I do everything else.
Well, I mean, that's a great synergy.
And I don't even want to know. I do want to know. I shouldn't say that. I don't have to know all the details because that's what he's doing. Is he's with the accountants, he's with the auditors.
No,
you're having to do the Qs and the Ks. There is a lot to be a fully audited, publicly traded company that he manages fully.
Well, no, I get it. And your job is really just to operate within the boundaries, which is the budget.
To grow the business.
Yeah, and to get the targets hit.
Yep.
I mean, you're the target hitter, right? You drive the ship to hit the target.
That's right.
Every day. And that's the job of every CEO. If anybody is watching, that's your job. Your job isn't to do anything but drive and hit a target.
Yep.
And you set targets to hit targets.
And to recruit the right people.
Well, that's part of the target
to make that happen.
That's the right. I mean, I think that culture in a company is key. And a lot of people miss that. I think people get compensation and culture, intertwined. I just pay the right people to work for me. I mean, you actually could win that way if you have an unlimited budget, but that's a very
Here's what I find with that strategy: the people that think they can just buy top talent, that talent, the next time somebody comes in, if that's the thing, they'll do the same thing.
Yeah. Well,
so if you don't have culture and you don't have mission and vision, and you don't have something people believe in, and they're there just for a bigger paycheck. Somebody with a bigger paycheck is going to come along if that person's talented enough.
I love that idea because A players want to work with other A players.
That's
players
right.
want to win.
That's right. They want to win. Tom Brady took a less salary than other quarterbacks to go win Super Bowls.
And that's the way to do it. I think this is very interesting to me to see what you guys have done because I see a lot of like I'm just a curious guy and the curiosity in me is like, man, I want to do some big things. You make me think big.
Oh, thank you.
Yeah, and so kind of final words about the book, right? So I'm thinking, you've got this in my mind. As soon as you said all this, I just think, the wheel like that. I don't know. Is it illustrated in your book this way?
It's illustrated as pillars.
Okay.
So it's 5 pillars in the book, and that's on each chapter.
Yes.
It has a pillar at the top of each chapter.
But
it could be a graphic. Maybe in my keynote that you're giving me an idea here of I might have a graphic for my PowerPoint on my keynote where I click through as a.
Well, the reason I think about it is because obviously you can't walk into your business every day and say, I'm going to equally give 20% of my time to these activities.
Yeah, it's more, it depends on the day.
Well, it's going to depend on where you are in the strata, in your growth cycle, right? So if you identify where you are, then that's where you figure, because a lot of like in the beginning, legal may sound like it's the most important thing, but typically it's not. It's revenue. I mean,
that's right.
I get calls all the time. Dave, I want to start a business, man. I need an LLC. I need to get an attorney. I'm like, how much sales you got? Well, we really haven't done that yet. I'm like, dude, look. Let me just be honest with you, right? Have you ever had to tell somebody the truth when you're just like, look, what are they going to sue you for?
Yeah. Yeah.
You got to have assets.
Well, it's the classic over analysis, overthinker They want to get it perfect before they start. There is no such thing
man.
as getting it perfect before you start. The way you get things to work is starting, refining, iterating. It's the classic Silicon Valley. Like they raise a bunch of money, they try to get the product to be perfect, and they never go out and try to sell it. And then all of a sudden the company's out of business.
Yeah. Well, if they get the product perfect, that's for you to buy.
Yeah, exactly. Yeah, because they have no sales engine.
Yeah,
They have
yeah,
no go-to-market strategy.
That's ideal for you, by the
Business
way.
development strategy. Yeah.
I heard this. I mean, I heard this recently, which was a very. There was a guy I met who talked about this book called The Innovator's Dilemma. Have you ever heard of this book?
No, that sounds like a great title though.
So the concept, and I haven't read the book, but the concept is that when you become very successful in a business, let's say a Google or a Microsoft, use those as two big, or even Nvidia. These are three giants, and whenever, let's call it a disruption is in the midst, like they know something's coming, but they've operated in this capacity or this way for decades. And a disruption's coming this way, coming at them, and they're like, okay, so we have a dilemma. Do we want to go back and try to get into that and innovate? Right? That's the question. They have to ask themselves that every day. Like, do we have to pursue every opportunity? And they have to make a decision, and the decision is to innovate or to acquire.
Yep.
And they're going to pick acquire every day because somebody else did all the work.
Yeah.
And they just reap the benefits like you mentioned earlier.
Well, I do want to speak to that. So I inherited a lot of acquisitions in my role as CEO. You have to not skip the merger part of the acquisition.
That's interesting.
It's M&A, not
A.
Yeah.
I've never heard anybody explain this to everyone, please, because I never heard that.
I think a lot of companies get excited. They also see these accretive financial instruments where you can go buy a company and all of a sudden your stock's worth more. Well, that lasts for about a year, maybe two. But all of a sudden, when you have these different competing products, competing cultures,
Systems,
the systems aren't merged, it will fall apart. It will disintegrate. It will eat itself. And so you need a very well-defined merger plan before you do the acquisition of how is this going to integrate, which system are we going to use, which people. And it's okay to let the best man win, but as the leadership team, set a goal. Say in 6 months, we're going to see which horse is going to lead this group. But having two leaders, if there's two leaders, there's not a leader.
Too many chiefs.
Too many chiefs. Nobody's going to follow. You're going to have dissension, and they're going to go to war against each other. And I've seen it where these cultures clash, and then they never become the same company. So if you want a bad to the bone mergers and acquisition plan, start with what is the integration plan before you go do the acquisition.
That is so insightful, because even I, with having kind of a knowledge of this, doesn't even think that way. Everybody just thinks acquisition. Like, I'm just going to buy that company. I'm going to acquire them because that's the strategy. But the merger is where the money's made.
That's right. That's the long-term value.
Yeah. That's the real enterprise value.
That's real enterprise value.
And nobody, I mean, even we were talking with a group about doing some accounting firm roll-ups, and we never even talked about what the integrations of any of these things look like. It was more so, well, if we acquire this one with this EBITDA, and we acquire this one with this EBITDA, and we got 3 years down the road, we're going to have this 15x multiple. It's like, yeah, let's do it. Right. And even I, though, in that process was like, man, like all these guys, I got to herd cattle here, right? Or herd sheep at this point. Like, come on, let's go. And it's not going to be easy.
Yeah.
And so that means you come to the market with the idea, but have the merger strategy first.
That's right.
So it's the M before the A.
Yep. Yeah. Whoever called it that probably intentionally set it up that way. And
right.
I think the acquisition side is actually the easier part.
Well, yeah, it's just money.
It's money.
It's just money.
Merging two groups together, man, that takes work.
And so right now in your role, how many have you guys had this merger acquisition in this current company that you're in?
Yeah, none so far.
Okay.
And it is part of our publicly published strategy that is in our Qs and Ks. And that was part of our capital raise. So when we raised the 10 million, our investors clearly know that this is part of the future strategy.
But I mean, for what you guys are doing, 10 million doesn't seem like very much money.
because once we uplist, the big dogs will be putting much, much more
I
in.
agree with you.
But we didn't want to dilute ourselves too much in the friends and family round. Then you're talking the big money will come once we uplist, which is at the $2
Well,
per share price point.
what I read a book recently. I can't remember what it was, but it was very good about like how to think through and how VCs think through equity, right? Because the
Mhm.
big dogs are going to come in with big money. But I would have thought that a lot of these companies want to come in and they want to buy or invest and they want to get a big percentage, but a lot of them are not trying to come in with a big percentage.
That's right.
Why is that? Just so everybody gets it.
They don't want that on their books. They want cash. They want the percentages. They want to be able to forecast that out and show the multiples on the cash. So and that would be a better question for Scott. I know this at a cursory level, but he said, you know, that's how it works is they come in and they take different instruments that they apply that they're just used to. And that's how they, you know, will put money out there. They love also, I think they make money on both ends of it. So they'll help you with the M&A strategy and they'll have people that
They bring in their team.
That's right. So they get paid to help you with that. So they get paid in other ways is what I think the short answer is. But they definitely will be in it. Like that's part of their game is they'll be in the stock. But it'll be in multiple different ways. That's the basic answer. And I'm probably getting over my skis if I tried to.
From what the book told me, you spot on what you said, and
Yeah.
they added to it that a lot of these companies they don't really want to control it, like
No.
because
That's venture capital. That's not publicly traded stuff.
Yeah. Well, I mean, I guess that's true, right? It's a little different. It's a nuance of the thing, but they don't want to control a lot of things because they want you to still be innovative. And if your skin is cut short, you don't have the innovative drive anymore.
That's right. Yeah. Which is why they wait till you uplist. So once you uplist, you've proven yourself, and that's when they start really like putting in heavy. So our goal right now is to get to that $2 per share price point.
Dude, that's so cool. You're making me want to buy a publicly traded company. You're making me want to do it.
If you're gonna do it, just get your mind right.
Yeah. Well, I'm trying to figure out. You called it a reverse triangle or what
merger.
That's an interesting concept that I've never in my whole life heard of. Now you know it's like one of those things you get exposed to, and you're like, how does that work? Right? There's got to be a book on this.
Scott's writing that book. Yeah,
he would be writing.
Yeah.
I mean, I just met him just 2 days ago. I think I had met him before, but really didn't have a discussion. But we didn't even talk about this company. We talked about some development.
Yeah.
I didn't know it was the same thing.
Yeah.
Or not, it's not the same thing, but I didn't know he was on both sides of this thing. I didn't know that. So that's interesting to know now.
Well, when Scott first started, that's what I admire about him. He slogged through. Well, see, he started in 2016 and I started a year ago. So he went through how many ever years that was of actually creating the concept of creating the product. So there was at least the idea there when I started. So
I like that. At least the idea was there.
Yeah.
Hey man.
And we did evolve it. We changed the name. We did a bunch of stuff, but man, he put lots of money in and rode this thing out to get it to where we are now. And so I appreciate him so much for having that vision and stamina to get us to where we are. And it's been a great partnership, and we're just getting started in terms of what we're about to do.
I'm it's kind of interesting, but based on just meeting you, don't know a lot about Scott. Hearing his journey, I mean, I can personally, I'm not an investor, I'm not endorsing it, but I can see why people would invest.
Oh, thank you.
I can see it. It's a big problem. It is definitely one that needs to be solved and can continue to be evolved. AI is a huge play.
The regulation needs to happen at a high level with this. So we've been meeting with Senator Marsha Blackburn, who holds the gavel for AI in the Senate. We flew to DC and met with her. She introduced us to FBI Director Kash Patel.
That's cool.
Had a quick conversation with him. She also introduced us to the head of the CMS, Dr. Oz. Had a conversation with him. So we're meeting with his team next week about changing laws with CMS regarding AI within hospitals and healthcare. So we're operating at that level.
That is freaking amazing. Well, this has been an incredible interview, man.
Thank you.
I mean, it's exciting. I know we didn't talk a lot about the book, but I want everybody to know that all what we shared is the concepts that come from
Sure.
the book.
This was real life application of the things in the book.
Yeah, because I think that getting into a book, I read a lot of books. And I'm always looking for one or two just nuggets, man, that just can speak to me and I can apply.
And that's what this is geared towards is a game-changing book for any entrepreneur of how to grow a business bigger than themselves. And this is a how-to step-by-step practical book that's like a field guide.
Is this the beginning of a series?
Our publisher's already talking to me about that.
I thought so.
Each pillar could be its own book. So
Yes.
so when you read it, you'll see like, dang, this could be a whole book is really what the
No,
feedback is.
that's probably right.
And yeah, but it's exciting. I do have some incentives for people pre-ordering it. So if you go to either my website, dustinhillis.com, you can pre-order there. You also can go to amazon.com.
Okay.
Right now, Barnes & Noble is offering literally today a 25% discount. Probably by the time the podcast is out, that'll be over with, but you can still go there to see it and buy it. But my website, if you ordered 10 or more, there's a video series that we're offering to do pre-orders.
So like a training on this?
It's a training. Yep. So they're very dialed in, things that are not in the book, application examples, specifically how to apply this to your life. So if you go to dustinhillis.com, pre-order the book, you get one of those. If you pre-order 10, you get the entire series. If you pre-order 100, you're invited here to the Greatness Factory in Nashville, Tennessee, and I will put a seminar together for anybody that buys over 100 copies of the book to give to their team, to give to their friends, to give to their family. So you just buy that at dustinhillis.com and you come and spend the day with me. And then if you buy over 1,000 copies, that's a day in Cabo with me. I have a house in Cabo.
You have a house there?
I have a couple houses in Cabo. Yeah.
Nice.
Yeah.
So, what you're saying to everyone is you want everybody to get access to this book, and you're willing to exchange a lot of value to get it.
That's right.
And I applaud that. You're giving a. And by the way, anybody who believes that authors make money,
Yeah,
it's so it's not because he's gonna make all that money back, just to be clear, right?
No, it's reinvesting it so people can have access to the information.
I mean, I get it, man. I've written books and I'm like, man, people who tell me, man, it's just easy, you make a lot of money, you wrote a book. I'm like, bro, if you knew
that comes from somebody that never wrote a book.
Yeah, I'm like, if you knew how much, you should see my royalty checks, bro. I mean, Starbucks looks really expensive.
Yeah, it's more about the content.
It's the message.
And I'm going to kick in next year. I'll do a few keynotes for certain groups if they wanted to have me in. I'd be glad to come and speak on these topics in a big forum type of thing. So.
Dude. Well, I wish you continued success. Everybody go out and get the book right now. If you don't already have a copy or pre-ordered it, go get it now. Dustin, this has been incredible, bro.
Thank you. Appreciate you having me and look forward to the next conversation.
Man, this is cool.